Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the charts behind me, which are of 5 stocks that I wanted to go over in this week's weekly trading plan. And so in the past, I have made these videos exclusive to members. But last week I put out the video. It was pretty tough to make. It was a pretty long one, and not that many people viewed. It actually took about 3 or 4 days before any of the members viewed the video. And so I thought, I'd try something different for this week's weekly trading plan, just going over a select number of stocks, going over trades that I hope to make over the course of the next week or so, just really going over the orders that I plan to place, see if they get filled. And I thought I'd make this accessible to the public rather than exclusive for members. And the reason for that is because I just think that'd be better for the channel's growth, making more content more accessible rather than making less content and making it less accessible. So, hopefully if you're a member, you agree with this and you think this is a good idea. If not, let me know in the comments down below. I'd be happy to listen to you guys, but also, I'd be happy to, make all of the material accessible to everybody and perhaps discontinue the memberships. I do appreciate the support, but I do think it's best for the channel if I'm, making all of the content accessible. But I do enjoy sending out the occasional updates on trades that I've made to members. So I do feel like there is some value there. But as far as the weekly trading plan goes, I think it's going to be much better going over a few stocks and a few trades. So I do think that this will be useful, but let me know in the comments. But before I continue on with that, I'm going to get into the charts. What I'm going over in this video is these 5 stocks, so AMC, Hycroft Mining, Luminar Technologies, NEO, and Plug Power. And so I hold all of these stocks I'd like to add to my positions, but I want to do it in a way that, I get the best price. And so I wanted to share that strategy with you guys. Maybe it works, maybe it doesn't, but I do think it's an interesting way to approach the market and to approach adding to positions. And so the first one that I'm going to go over is Hycroft Mining, ticker symbol HYMC. The reason why I want to start with this one is because this is the one that I have the smallest position in, meaning the smallest dollar amount that I've put on Hycroft, whereas AMC put the most on that, so I'll do that one last. And so looking at Hycroft, what is a level that I could see being a good dip buy for Hycroft? Looking at the chart here, one might think $2.09 or maybe $2. We did hit this low on August 9th of $2.09. That was, definitely a good dip buying opportunity as we have gone up. Let's see, about almost 10% since then. But I actually think there's potentially a better dip buying level, and that is really just based on the fact that we've had this down move. We've been consolidating, potentially consolidating below that green uptrend here that had acted as support in the past. And maybe it's acting as resistance now. We are above it now, but we are perhaps getting rejected, or at least testing the 236 here at $2.29. But, I'm just a little bit concerned that this is a bear flag and that price could be going lower. If it does go lower, I'd like to scoop up some shares. And the price that does stand out to me as being a good dip buying level is the 1618 from this white retracement here. Don't have any of the levels to the upside, just got that bottom mark there at $2.20. Which was hit on June 26th. But so from that, the 1618 is at a price of right around $1.75. So, how would I pick up shares at $1.75? I could just place a limit buy order at 175, hope it gets filled. But I think there's another way that might actually allow for the purchase of 100 shares at $1.75, even if price does not get to $1.75. And so that strategy is going to be based on options, specifically looking at puts. And because Hycroft only does monthly contracts, the next contract is going to be the September 20th expiration. And, on here we don't see $1.75, but we do see a strike of $2. the bid price, or the price to sell a cash secured put. So that would mean I would have to have $2 on the side to sell this, and I would get a premium here of $0 or 0 cents. And so, I could just pick up 100 shares at $2, or I could place a limit sell order with the bid price set to a price of 25 cents. And so that order will be placed. Maybe it would get filled, maybe it would not. If it would get filled, I would get 25 cents per 100 shares premium. So that's $25 per contract. And then I'd have to have $200 on the side to pick up 100 shares. But because of that $25 premium, I really only need to have $175 on the side. And so that would effectively put my average buy at $1.75 per share per contract, which is 100 shares. And so that does stand out to me. I do feel like it's unlikely to get filled, but because I do have a pretty small position in Hycroft, and I do think that looking at the chart, this could be a bear flag and we could be seeing price lower, I think that would be a nice way to get my position to a lower average, buy on a dip without having to place an order, just have this cash secured put order, this sell for a put placed. And that, if price drops, it doesn't even have to go down to $1.75. It could go down to $1.80. And, with that being said, if this premium spikes to 25 cents, then I'd get 100 shares at $1.75, even if price doesn't go that low. So I feel like that's a pretty compelling strategy. And so I'm going to try it out with Hycroft. I do feel like it's unlikely for this one to get filled. I think that there are other plays that I'll go over that I think are more likely to get filled. But since my position is so small with Hycroft, I feel like, I should just place it, and it's a nice way to set $175 on the side. Maybe I decide to use it for something else in a couple of weeks if this doesn't fill. But for now, I think it's a nice way to set money on the side for a stock I want to add more to, my position. And so, so that is Hycroft Mining. The next one that I'm going to go over is NEO, ticker symbol NIO. This is one that I picked up. I've got about 200 shares now. The initial 100 I got by buying shares, and then the second set of 100 shares I got by selling a cash secured put. And so for NEO, I'm actually going to flip over to the screen that I'm looking at so I can tell you the price that I would like to get at. It's actually pretty easy to tell looking at the chart. That is going to be the low that was hit over here, 361. I'm just going to adjust the axis so it is automatic there. And so 361 was the low hit on April 22nd. And the recent low that we hit on August 8th was at 363. So, could have picked up some cheap shares then, but I feel like 361, like I said, great dip buying opportunity there. Although, just like with Hycroft Mining, I do think that it could be a bear flag over here. I do think it could be going lower, but I think that 361 is an appealing price. And so the way that I would pick up 100 shares at 361 would not be just by placing a limit order at $3.61, but again, by looking over at the options table, looking at puts. And for this one, and actually all of them, I'm not going to do it based on the weekly contract. I'm going to do it based on the next month contract expiration, which is September 20th. So just like with Hycroft. And so this one, I am thinking about a price of $3.61, this low over here. So what I would do, the way that I would place that is I'd look at this $4 strike that, expires in a little over a month from now on September 20th. And the premium for that, the bid premium to sell a contract, is 35 cents. So per contract, I'd get $35. So $4 minus $35 is $365. So pretty close to that 361 that I'm interested in. So I would place my limit order for the strike of $4 per share, or this $4 strike here. I would place my limit order at 39 cents, so just 4 cents higher than the current premium. And then, maybe that would get filled. I feel like this is much more likely to get filled than the Hycroft Mining one. But this is also, a higher price per share. Maybe it's not too extreme for you guys. But for me, I'm a little bit reluctant to, add so much, especially because this would not be on such a dip. So this, because we're pretty close, or we were pretty close, hitting a low of 363 just, like a week ago, about 9 days ago. And so, I feel like this one, if it does break lower, maybe it could be coming down a lot lower. This is the 1618 from this white retracement. I feel like it's not coming down to 210, but maybe it does. And if it does break lower, I don't want to buy a bunch of shares so close to the current price. I would rather wait. And so, with that being said, I personally am probably not going to place this order, before the start of Monday for a limit sell at 39-cent premium. So I'd get $39, and then I'd have to have $400 minus $39, so $361 on the side to purchase these shares if price closes below $4 a month from now. Might very well happen. And so for me, this one, I'm just going to be on the side, but that is kind of how I would place that order, because price doesn't even need to go down to 361. This would be at a buy of 365, and price is currently above that. So that does strike me as a very nice way to pick up some shares. But for NEO, I'm probably just going to sit on the sidelines, hold my 200 shares that I have now, and, just relaxing. So that's pretty much it for NEO. And the next one on the list is going to be Plug Power, ticker symbol PLUG. This is one I have been accumulating more recently. I've been accumulating by selling cash secured puts. And I would like to add more, but this position is slightly larger than my NEO position, so I feel like I should do the NEO buy, but Plug Power is almost half price relative to NEO, so I do think that I will probably be placing a limit sell for a put to pick up another 100 shares. And for Plug Power, the limit price that I have, I'm just checking my screen so I can see it. You might be able to tell from looking at the chart. You might think it's 191, which was this low that we hit on August 12th, but it's actually 186. That was the pre-market low during their earnings call. Price hit that level, so it'd be great to pick up 100 shares at 186, but price is above that. So how would I do that? Would I just place a limit order at 186? No. I'd go over to the options table and look at puts that expire, let's see, on September 20th. I just think that's the best way to get, the discount is by it being, a month in advance. And, I might be then just waiting for that to fill. But, if price does go above the strike price, then, I just get to keep the premium. If it goes below the strike price and closes below the strike price, then I get to pick up these 100 shares. And so with that price being 186, I would look for a put with a $2 strike. And so that is going to be here, $2 strike, September 20th put. We can see that the premium is 13 cents. And so if I want to get 100 shares at 186, mental math, I'm not so great at it. But I would want this to be at 14 cents. So 14 cents or $2 minus 14 cents is 186. So this just needs to increase the premium here for the bid to sell by 1 cent. And then if that's 14 cents, then I can effectively pick up 100 shares at 186, which is the low that wasn't even on the chart looking at the daily time frame here because it was pre-market. So, I think that'd be a really nice way to add some shares and just set, about $200 on the side. So this is one that I probably will be placing the order at the start of the market on Monday. Just to get those 100 shares, secure that. But then, let's see, we see price closing above $2 on 20th, hypothetically, maybe that happens. Then, I wouldn't pick up 100 shares at 186, but I'd get to keep the 14-cent premium, which translates to $14 per contract. So I don't view that as too bad. That is appealing to me, a nice way to set some money aside, pick up shares in a company I like, or just get some premium. So, that's fine with me. And I should note too that this one, like the others, could potentially be a bear flag, like a dead cat bounce here. Maybe this breaks lower, but, with this, 186, it's still pretty cheap per share. It could always go lower, could go to $1 a share. And if I do look at, let's see, this 1618 extension, or from this Fibonacci, that's at around 150. So if it does break below 186, it's not a huge order, 100 shares at that price. So I could probably reevaluate and pick up another 100 shares at a later week around 150. So, that's no big deal. But, that is something to consider. And actually, this is something I need to think about. And now that I've taken a step back looking at this, I had it in my little spreadsheet that I was looking at on the screen that you guys can't see, that I think that 186 looks like a good dip buy level. But 150, psychological level, it's just that, looking at the options table, 150, yeah, actually, I could get $2 for that. So, I'd have to think about this for Plug Power. Do I want to do, this would effectively put my buy price at $1.48, but then price would have to close below $1.50 a month from now on September 20th. And I don't think that's terribly likely. Maybe it dips to that level, but it bounces. And so, yeah, I would probably stick with the $2 strike, 14-cent premium. So I'd get 100 shares at an average price of 186. So yeah, that seems like a nice way to average in on the dips. And if it goes lower, I would then just reassess. So that's kind of my strategy for Plug this week. And then the next one on the list, this is my second largest position based on capital invested, not based on, number of shares, just based on how much I have put into it. And so that is going to be Luminar Technologies, ticker symbol LAZR. And so for this one, we can see that the recent low was hit on August 12th at a price of 79.09 cents. Got that line here, but just below that from this Fibonacci retracement here, we can see the 1618 is at 74 cents. So that is the price that I would like to pick up some Luminar shares at. And so how would I do that? Go over to the options table to look at puts that expire on September 20th. And let's see, 74 cents is just below $1. So I would look to sell a cash secured put with a strike of $1 expiring September 20th. But to get that 74-cent average on the share price, I would want to set this bid price for the selling of this cash secured put. I would want to set that to 26 cents because $1 minus 26 cents is 74 cents. And so I will probably be placing this at the start of Monday. And, maybe it gets filled, maybe it doesn't. It's just setting aside $74. So it's not really a big deal, but if price does break lower, as this could very well be a bear flag and we do see it go lower, it might go past 74 cents, but I kind of put the pause on my buying when we started to gap down here. I got a little bit reluctant, didn't want to be chasing a falling knife, and with that being said, I didn't buy at 79.09 cents. And so given that I exercise patience there and discipline and not buying, I'd be happy to pick up 100 shares at 74 cents. And if it breaks lower, I just reevaluate and then I'd add more lower. Or, I just put on the brakes. I'd have to wait and see. But I do think that 74 cents does seem like a great dip buying opportunity or good level for Luminar potentially. There is support there with that 1618, although that would be breaking to new all-time lows, so maybe a little sketchy there. But, thinking longer term, I think that would be fine, at least for me. And so that would be based on the $1 strike for a put expiring September 20th. With a premium bid price of 26 cents. So I would collect that premium when I sell the contract, and I'd then have to have $74 on the side to pick up 100 shares at a strike of $1 minus that premium. And so that is how that one would work. And then the last one on the list is going to be AMC Entertainment, ticker symbol AMC. Did just put out a video on them as I do every Friday. And yeah, this is one that I have just been accumulating tons and tons of shares over the past, years. And I'm kind of at a point where I feel like it's going to be taken off soon, but if it does dip lower, we got this fake out break here below these trend lines, below these Fibonacci levels. And that was just a dip lower. And so I'm wondering, if this is going to hold 490. I feel like that's going to be a bottom, but maybe we get another fake out break below, or maybe we even get a break down. I don't know. And so, if we do get a breakdown, I'd like to pick up more shares. If we don't get a breakdown or about ready to bounce, I've got plenty of shares. I'm happy with the position that I hold, and I look forward to, seeing where the stock price goes. But if it does break lower, I'd like to add. And for me, because this is DGen Ed, I like to have fun with the numbers. And given that, if we take a step back and I adjust this axis, we can see this yellow line at $4.10. That's kind of a nice level, but also the wick low that we saw on the 5th, the candle low was $4.41. That was also the opening price. But if we do switch over to the hour time frame, we can actually see that the low came down to $4.14.1. Just before market open, that was the low, and I didn't pick up shares then. I was reluctant because I had an order placed at 410, and so I feel like, I could have gotten more shares at 420. I didn't do that, and so what I would like to do is pick up more shares at 420. Maybe it gets filled, maybe it doesn't. But the way that I would carry that trade out would be based on placing a cash secured put order or, a sell order for a put. And in doing that, I would be able to collect premium and then pick up those shares. And so I believe, I'm just going to check my screen here for a second. The way that I would do this is a $4.50 strike, also expiring on September 20th. And so if we look at the table here, we can see $4.50. The premium for that bid to sell one of those contracts is 12 cents to get the price to $4.20 for this, average buy. I'd need that premium to be 30 cents. And so, while I really, really want to, I also don't want to spread myself too thin with the amount of capital that I have for this week to be investing. I would like to place a limit sell order, 30-cent premium at the $4.50 strike, but I'm probably going to hold off just because I've been doing a lot with unusual whales and trying to practice, or getting practice, I should say, trading contracts to collect premium on a variety of stocks, and setting $420 aside would kind of hinder that process. And so I really do want to be getting better at trading those call and put options. And so I will probably not be placing this order to sell a put, which is a bullish move, saying that I think that price will be higher than 450 by September 20th. But if it is lower than 450, I would be happy to pick up shares. And that's just the reality. I would be happy to pick up more shares if price was below 450. And if price dips from current price around $5 to 450, I could see this premium going up to 30 cents. And then that would allow the possibility to pick up 100 shares at right around $4.20, right around there where the cursor is. It's 0.2 pennies off. But yeah, so that would be my strategy with AMC, and that would be my strategy for NEO. But I'm probably going to sit these two out, place the orders first on Hycroft Mining, then on Plug, as well as Luminar, because I would like to add to those positions that I hold, and then maybe I would consider either placing an order on NEO or maybe AMC. But either way, I'm just happy to hold the shares that I do have and or selling covered calls. I tend to do that every week. And so for all of these stocks, I do have at least 100 shares of them, so I can sell a covered call. I tend to do those with weekly expirations, and the reason why I do that is so I can collect a little bit of premium on the shares that I hold. I make sure to set the limits above my average, so if price does go up a lot, I'm not selling below my average. And with, all of these stocks, and especially AMC, looking at this here, I'm very reluctant. I do not want to sell any of my shares, but at the same time, I, like everybody else, got bills to pay, whatnot. And so it is a nice way to, if AMC, let's say, does start to squeeze over the next week, it would force me to trim my position, which I don't want to do. But over the past many years, I've accumulated so many shares that I have way more than I had initially expected to hold. And so it wouldn't necessarily be a bad thing to trim a little bit to lower that risk. And then if price does pull back, as we have seen, following this last squeeze, then, if I were to trim, take some profits, then I could buy back on the next level down where we would see some consolidation. So for me, selling covered calls is a nice way to, I guess, edge my way out of positions while selling cash secured puts. I have found just recently is a very nice way to add to positions. So that is what I will be hopefully doing this week. But I'm just going to place those orders and see what happens. And so, you'll have to let me know what you think in the comments below. But, those are just my thoughts. If you found them helpful, make sure you like the video and share your thoughts in the comments down below. And make sure you subscribe to the channel for more videos like this. Thanks a lot for watching, and I hope you guys have a great week trading. Take care.